Maverick Traders. This is Rob Reinhold. I'm joined by Mr. Darren Fisher, and here we are. Already have 1 week of August behind us, and we're moving on. So let's talk about last week's news. So last week was really just a basic sideways price action. We did have the Nasdaq and the Russell that were up a decent amount, but the S&P and the Dow really went nowhere. Gold really went nowhere. The big mover last week was oil. Oil got crushed about 10% for the week, and we had two bits of news come out. We had news come out that OPEC produced a little bit more than expected and agreed to more production in the future, and also some of the supplies that were on record were actually bigger than was expected. Oil fell down below 90. We're below 90 for the first time now, and 90 was really where we were before the Ukraine and Russia war started. Sorry, special operations started. I need to get that one right. Right, Darren?
Yes, the special military operation that has drug on for, 7 months now?
Not a war, special operation. All right, so again, we're having this relief of energy prices, this relief of commodity prices, and that's really been the impetus behind this rally we've seen over the last 2 to 3 weeks. But I really want to talk about Friday's job report, because Friday's job report came out much stronger than expected. And the markets didn't like it initially. We had the Nasdaq at one point was down about 1.5%, almost 2%. The S&P was down 1%. And I talked about this last week, how that a hotter number than expected would actually be bad news for the market, because that meant that the Fed was going to be even more hawkish. And the market had bet that the Fed was going to become less hawkish with all the commodity prices coming down. But this number pretty much says they've got to keep their foot on the gas. And the Fund Fed's futures actually went up to now they are expecting a 100 basis point raise instead of a 0.75. So we went from a 30% chance up to a 60% chance. And all the bond yields are now running again. So this is not great news for the market to get these bond yields really running. And I have to ask the question, did it change the trend? Now, when we get into the charts, both Darren and I are going to give our point and counterpoint, but I think that Friday's pay report might have changed the trend of this little short-term rally we've seen. But let's take a look at those charts before I get too far ahead of myself. So looking at the market, Dow Jones basically down 0.2, S&P up 0.3. As you can see, the Nasdaq and the Russell were the outperformers. We already talked about the big drop in oil. So let's take a look at this S&P. Now last week we talked about this big band here, right between 410 and 418 on the SPY. And we said, hey, we're probably going to push higher up into that level, which is what we did. And you can see here, mostly green candles. We had a little bit of a red candle on Tuesday, but pretty much there was more buyers and sellers all week. So we just pushed up a little bit higher. We had a +1 on the week. It was basically about a +1 here. The big question is, how long is it going to take us to break out of this range? And number two, are we going to break out of the range? So my call is that I really want to see Monday's candle, because I got to tell you what, Friday morning, I was looking at the charts and saying, hey, you know what? If we close red, I think that is a short-term top, and I think we're going to pull all the way back down to 400 on the chart here, which is about a 2.5% pullback. The fact that we clawed it all back and actually had a green candle tells me that that premise isn't quite as strong anymore. So I'm going into next week saying, if there is a red candle on Monday, I think we're going to get that pullback to that 400 or the 20-period moving average. Darren, what's your call next week?
Yeah, it is, everyone say, well, yeah, everyone wants to know what the candle looks like on Monday. And this is going to be one of those weeks where I think discretion is the better part of valor, in that don't have anything lined up to launch Monday at the open. I think you wait till 3 p.m., give it an hour before the close to determine what you're going to enter on Monday. I think the best that the bulls can hope for right now is that we base up at this area, because there's a lot of overhead resistance above this. I mean, this is resistance right now. I mean, the next place that we're looking at, 430 would be another level, and looking up at the 450 area is another level as well. There's so much overhead supply with people saying, please, I just want to get out at a break even. So I think we have to, at the very minimum, wait for the 20-period moving average to catch up to where we are before we can have any semblance of a push higher. And I think this is kind of a precarious week for the market because I was with you. I thought, well, that was the top, but then the buying strength in the afternoon just really surprised me. So like I said, discretion being the better part of valor. Wait to see how Monday closes out before you start launching trades downrange.
Great call on that one, Darren. If we take a look at the Nasdaq, you can see we talked about getting us pushed up into the 320, 330 area, and that's really where we found our resistance. Look at the candles, though, on the Nasdaq. 5 days, all green candles. We had gap downs, they bought it. We had gap ups, they bought it. So it just is showing you that there's a lot of underlying strength here in these markets, and that's why you want to take a look at this. We had this big run from 293 all the way up to 325. That's a huge run in just a space of 6 or 7 candles. And of course, you want to say, oh, there's going to be a pullback. There's got to be a pullback. Look at the candles. They're not pulling back here. So this is where I look at all the data. I'm thinking, okay, that jobs number on Friday is not what the market wanted. I think we are going to see a lot higher interest rates over the next week or two. And in the past, that's been bad for the markets. The problem is the market's not showing me that my premise is right. So that's why I say I want to see Monday's candle. If Monday's candle is a green candle, we shake it off. You know what? I'll drink the hopium. I'll jump on board and I'll be a bull. I'm very happy. I've been a bull for the last couple of weeks. I got a little neutral here, and now I'll go back to being a bull. But as Darren said, not a wild bull. This is barely an uptrend at this point, and there's tons of resistance, as Darren said. If we take a look at the VIX, the VIX was basically flat all week until Friday, where we actually fell in the VIX. So the VIX fell 3% on a day that the market was actually a little shaky. It just goes to tell you again, there is no major panic, major sell-off here. And again, like I said, my premise is that, okay, that was a top, we're going to pull back. However, here's the problem. I don't have any of the actual technical signs that are telling me. That's why I'm looking at this saying on Monday, I will ditch my premise. I'll throw it away because it's clearly wrong. I will wait till then and throw it away. So if we take a look at this week, we are in that resistance zone. So Monday's going to be a big deal. And look, we've had this big run. After big runs, you typically pull back or base. So it's not going to be a surprise. Even without the report we had on Friday, we still would be saying, hey, it's likely to pull back or base just because of the energy we've expended. I think next week, the key is to watch the bond yields. If the bond yields start to move higher significantly, it's likely going to be trouble, and it's likely going to be trouble for the tech stocks. It really hurts these highly valued stocks when interest rates go higher. And we have second quarter earnings season is mostly over. So we've gone through them. It was an okay season, but here's what the point is. When it's a terrible, lousy market and it's an okay earnings season, that's actually pretty good. It's actually pretty good. So let's talk about next week's reports because we've got CPI on Wednesday. Darren, I think this one's a tricky one to call. They're looking for 0.2, so they are saying, hey, inflation is coming down. And again, 0.5 on the core. Do you think we can actually get to these numbers?
No, I don't think so. I think there's a lot of hope baked into these that's coloring the consensus. That's what they want to see. I think what they really are going to see is they're going to see some higher numbers. The one that I'm interested in is the core PPI, that month over month number, because with inflation right now, the PPI has been, to my recollection, the PPI has been going up faster than the CPI has, meaning that the inputs for the producers of goods and services are going at a faster rate, going up at a faster rate than they are able to raise prices for the consumer. Eventually, that's going to start to squeeze that bottom line. And I think we didn't see massive amounts of it in this quarter's earnings, but I think if you start to see this really ramping up, then you're going to see it in Q3, and that could be the next leg down.
Look, I agree with you on the core PPI, but the big fireworks is going to be that CPI. The market's going to react to that and that alone. And if that comes out hotter than expected, again, I think it's a real trouble for the market. And it's a weird thing because most times there's good news. It's a binary thing. Market goes up on good news, down on bad news. We're not at that point here. Good news is actually bad news. Bad news is actually bad news. What you want is okay news. Okay news is what the market wants right now. They wanted a 250,000 K job report. The market would have soared on that. We got one that was too hot, and it is going to worry people going forward. So this week, I've got a 0 on the market. As I said, and Darren said too, I mean, it was perfect, was that just don't stick your neck out. Let's see what Monday brings. If there is a bout of selling, we'll take a look and see where this is going to bottom out, and we'll look to take some longs off of that. If the candle on Monday is strong, I have to throw away whatever my premise was, that report was too hot and the market's going to come down, because the market's telling me, hey, idiot, no, it's not. Jump aboard or get left behind. Let's go through some sectors, Darren.
Yeah, let's hit those. So kind of interesting. All right, yeah, you can take a look at how the individual sectors have performed. And you can see with the drop in oil, energy went down, 6.81%, which is a pretty big move for energy. But we're going to see it's still there's been such wide moves in energy, it's still within the moving averages here. Everything else was really nothing of note. Technology, up 1.94 right there. That's going to be the best performing sector right there. Everything else was just kind of in this range between -1, negative 1.4 and positive 1. I mean, that's it. It was just not a whole lot of movement. And I think we've been desensitized to markets like this. But if you think back in previous years, this, except for the movement in energy, this would not be an unusual week in any time period between 2015 and 2019. It would just be a business as usual week. We've just been so desensitized to it in 2020, 2021, and 2022 that this looks like paint drying. But there are some things that you can go into in each individual sector. We're still playing strength and weakness. So let's take a look at the charts of the individual sectors. Now, I have to admit, this is pretty easy for me to do. My rankings did not move one bit on any of the sectors here. So I'm still at a +1 on utilities. I think that's pretty good. A little bit of strength right there, but it looks like we're just going to base. I mean, we had that massive move a couple of weeks ago, and I think we base and maybe float up a little bit. But utilities, looking pretty good. Now, as interest rates go up, the thing you have to keep in mind is that utilities are often a proxy for bonds, because they do pay many of them do pay a dividend. So if we do have if the bond yields start to raise considerably, that could put pressure on utilities, but that's not being reflected in the charts right now. So don't take that as gospel until they actually see it. Communication services, I've still got comm services at a 0. You could say, well, we're kind of in this slight uptrend right here, right there, but it's going to take. There's been so much damage done over the past really year in comm services that it's going to take a very hard move to the upside to get any type of strength right here. So I'm at a 0. I think we just plug along sideways in comm services. Real estate, I'm at a +1. Kind of a little bit of a down week. We pulled it off on Friday, but I still +1 right here. We're above the 50, and it's just in this range right here, which that's a lot of stuff. I mean, that's a lot of things are going to be in this range. I think you still have to be, the market's telling you still have to be bullish, but you don't have to be a super bull. So +1 for real estate right there. And I'm at a +1 on industrials as well. You could make me the argument that this should be a +2, but again, we're just at that resistance point right there. And I think the best we're going to hope for is to be basing right here. I mean, we're in a fairly wide range. Again, this is going to take there's a lot of overhead supply out there, and this is going to take some strong-handed buyers. There can't be any weak hands if we want to see a move up. So I think we drift up a little bit, but we're not going to see any sharp moves until that moving average can catch up with it. Healthcare, on the other hand, it's still looking pretty good. We're basing right now. but the 20 is over the 50, and we've pulled back to it nicely. And I think I think this just has to be a +2 environment. Healthcare's been stronger for longer. It bottomed before a lot of other stuff did. There's still that resistance out there, but if anything could push through this, since healthcare's been strong the first, I think this is one of the ones where people are like, okay, I see some light on the horizon for healthcare above other stuff. So I think that's where you go with that. Financials, I'm at a +1. These are just, you haven't had any explosive moves in financials, but we've just kind of drifted up. And we've meandered up. I think that's what financials continue to do. We've got that resistance about the 35.50 level, which is it's probably almost a couple percent away. Nothing to be really excited about in the financial sector is what I'm going with. Consumer. This is another one that's looked pretty good. Friday's candle didn't look the best, but the rest of the week this has been great. I'm at a +2 on consumer. This is one that again bottomed early and has had a really good move. There's been a lot more velocity to these moves in the consumer than a lot of other things. Still, we're dealing with some of that. Is what was previous support back in March going to become resistance right now? I think time's going to tell. But I think this one has the better odds of continuing to the upside. That's the same with tech as well. Tech was looking weak, for a while there, but it's really come back with a vengeance. So I'm at a +2. I mean, you saw the Nasdaq was up 2%, almost 2% this week, and I think we continue to stay up there. And then we've got a little bit more room to run before we hit any additional resistance. And I think tech actually goes through it. Base materials, we're at a 0. I was at a 0 last week. I'm at a 0 this week. I want to see some definite movement above that 50-period moving average before you're going to convince me to get bullish again. Once we do, though, I think you could, it's clear sailing up to that 80 level. But there's just a lot of things out there that haven't been looking good. A lot of technical damage done very, very quickly in June to the materials sector that had been holding up previously. So they're still in a show me status. I want to see which way they go. And energy is also the same boat right there. Even though it was down as much as it was, if it get clawbacks on those gains on Friday, put it above that 20-period moving average. Even with oil down that much, I think that I'm at a 0. If oil has another down week like this, then I think energy does fall down. You have to actually go negative for the first time in a long time in energy. But if oil holds here, I think we slowly claw back up in the energy sector. So let's take a look at everything. At 0, energy, materials, and comm services, there's nothing really bullish or bearish about either of those sectors. So I'm probably going to stay away from most of them. Slightly bullish, industrials, financials, real estate, and utilities. Those are all looking pretty good. And technology, consumer, and healthcare at a +2. I think if you're looking for bulls, that's the sector that you take a look at to try to capitalize on that sector strength. So let's take a look at some potential trades we're looking at this next week. Now, last week in real estate, we were long COLD. And that one actually never triggered, at least by my reckoning. Anyway, that's fine. That was down 5.19%. Probably just size of max loss and forget about it. This week, we are looking at AMT, American Tower. This is a nice high base. And you can see we're up there. We're breaking through. It's through resistance. Resistance about that 270 level. We're slightly above that at 272. And we've been uptrending for several months here since June. So this looks like to be a very decent trade. I'm going to go out to September. This is one that I want to hold for a while. I'm going to be long that September 270 and short the August monthlies 280s on it. If it just hangs out between here and 280, I'm fine. I'll reevaluate the trade on August expiration. If it floats up towards that 280 level, I'm even happier right there. I think you could probably hit it right up there over the next 2 weeks. So I think that's a fairly decent trade right there. In communication services, I know I said I'm at a 0 on that sector. Last week we were long we were short Warner Brothers Discovery, WBD. And that went down 2.73%. So slightly bearish on it. Would like to have seen a little bit better move to the downside. But if you're still in that trade, I think it looks pretty good for some continued action. This week, we're looking at Roku. Roku's in a very nice bear rally. I mean, we got all the way down to 65 and clawed its way back up to 82. That's a huge move in a week is what it was. A huge move in a week. So if you definitely didn't want to be short this last week. Now, what I'm going to be looking for is for it to turn over. I want to see a lower low and a lower high. Wait for that confirmation. Do not try to get into this early. Then I think, an August 19th, 80-85 bear call spread is going to be the best way to get into it. As this thing slowly drifts lower. And with the move that's made, that's a $5 trade and something that's just moved $17. A little bit wimpy, but like I said, don't expect too much out of your bulls. Don't expect too much out of your bears right now. Just try to hit those singles, maybe a double, and plug away at the market as best you can. In healthcare, last week we were long Centene, I think is the name of that, and that did perform for us. A little bit disappointing. That was up 0.09%, so barely moved over the entire week. But if you want to hold on to it, probably going to take it probably has a good chance to go to the upside. This week, we were looking at Danaher, DHR. Again, this one's in a nice high base, and it's cleared back, cleared past the April highs right there. So it's past any previous resistance that it had. And if it can break out of this, it looks like it's got a good chance to continue moving on. So this just seems to be the season for diagonals. And you can either, if you don't want to be that aggressive and don't want to commit to that type of time frame, you could do the August 280, 290 bull call. I'm going to go out to September, be long that 280, and then short this August 290 right there. It's right at the money. You're going to get the most premium out of it. I can afford to have this go nowhere for 2 weeks, and that'd be good. If it goes, up to about that 292, 293 level, I can decide if I'm going to buy back those short calls and hold the long ones, or maybe rolled up into a 280, 300. A lot of different things you can do with something like this.
In the industrial sector, this is quite a strong sector. It was stronger than I thought it was going to be, and it held its gains. Now look, it's not like the greatest sector of all time, but it's decent. Last week, our call in the industrial sector was long Builders First Source, BLDR, and it had a great first half of the week. At one point, it was up about 5 or 6%, but then pulled back and was up just under 1% for the week. Trade still looks nice. It just had a pullback at the end of the week. This time, we're looking at UPS. Now, take a look at this chart here. I just absolutely love bases like this. And it really is telling a story because we had this massive run from 180 up to 195. And on UPS, it's not a huge mover. That's a big move. No one sold. No one sold. And on a day that was weak, this thing breaks out and closes at the high. This is everything I'd like to see in a bullish stock. It doesn't mean it's going to be a winner, but it's at least everything I want to see in a bullish stock. So the big question is, how do you want to trade it? As Darren said before, and I'm going to say again, is that I'm not expecting either bulls or bears to go all that far. This is not the kind of market where we, swing for the fence where, in the fall of 2021 where we were very bullish, you're taking trades that were very aggressive. And then when we were going down quite hard, we were taking aggressive trades to the short side. We're just not in that situation. So as Darren said, singles and doubles, and let's make a little bit of money and let's get ready for when the market does start to trend. So I'm looking at the 190-200 diagonal call spread. Basically, we're just looking up to here. We're playing this range. We're buying the September 190. We're selling the August 200s. You got 2 weeks to see what this thing does. If it hangs out in here, you made money. If it floats up a little bit, you made a little bit more money. If it floats down a little bit, you broke even. It's a very, very slow-moving trade here on this diagonal call spread on UPS. But that's what we like here in this market. In the financials, we had Upstart short. It never triggered, and it actually had earnings report, big pop on that one. So again, this is why we use our triggers to stay into things or to not get into things. This week, we want to take a look at Visa. Now, as I was going through the sector, looking for a trade in financials. I couldn't find anything I loved. Goldman Sachs looks pretty good if you want to take a look at that one. But this one, to me, it was telling me, hey, you know what? It's strong, but it's not taking off anywhere. And that's fine. When you're just a directional trader and everything is either long or short, this one doesn't make any sense. But when you're an options trader and you say, you know what? I really want to take a bet on this one, that it just stays in a certain area, that it just stays here. And so I like the 215, 220, 225, which is basically opening up a butterfly and saying, hey, you know what? I think it drifts up into this area. And when it gets into this 220 area, I'm going to take half of my position down and I'll hold the other half. So look, you can make this bullish if you want. If someone said to me, Rob, I'm more neutral, I'm going to do the 210, 215, 220. Okay, that's fine. Look, these targeted butterflies are sometimes tough. We have no idea where they're going to go, but that's why we like to take half down when it gets to our target and then let the other half ride to see if we can get a little bit more time decay. That's a sideways trade, slightly bullish on Visa.
In consumer, last week we were long Starbucks, and that was up 1.12%. So we definitely want, it's just, this is what the market is telling us. Don't expect a whole lot of these things. We were right on the direction, just not necessarily right on the on how far it was going to go. That's fine. This week we're looking at BJ's Wholesale. Ticker is BJ. You can see we're in this very long multi-month ascending triangle right here, right at resistance. And that resistance goes back to April right there. So if we can poke above it, I think this is going to be great. I would be, going out to September, long those 65 calls, and you either short August 19th 70 or the 75, depending on where you could get it. If you think it's not going to do a whole lot, then you short that 70. If you think we are going to get a breakout of this area right there, then you short the 75. Either trade looks good. You can reevaluate it on August 19th, about 2 weeks.
Hold up, my computer's frozen up a bit. All right, I'm ready again.
Okay. In technology, last week we were long Bumble, and this one really didn't do a whole lot. For the week, it's down 0.95%. So decide if you want to stay in that trade, or just get out of it and look for something else. This week we're looking at Corning, GLW. Again, this is another bull pullback. Wait for confirmation. I want to see a higher high and a higher low to see exactly where it's going to bottom. This thing could technically go all the way down to the 34.75 area, and it would still be in an uptrend. So just wait for that confirmation. Wait for the market to tell you where there's a bottom. You may think you're going to be losing pennies if you wait for that confirmation, but if you get into a trade early, it's very easy to lose dollars. So we're just looking at something really bread and butter right here. August 26th, 35.38 bull call spread. If it does go down a little bit more, just take a look at the strikes and see where you want to go.
Both materials and energy are at a zero. So last week we had Huntington. Last week we had Huntsman's Chemical as like a sideways short. It was down a whopping 0.1% on the week. So not a huge move, but look, when the market was strong and your shorts go down a little bit, it's always nice. This week we're going to stick with the sideways strategy here. This is Livent. This is a lithium mining company. And you can see here, there's really been no movement over the past couple of months. Now, this is a highly volatile stock. I know you look at this chart and you say, oh, this hasn't gone anywhere. Yeah, it's gone from 20 all the way up to 34. So that's just like a 70% range. But recently, if we tighten up these lines here, you can see that the range is more in the 22 to 27 area. So this is the area that I really want to focus on and say, hey, I don't think this thing is going to trend anywhere. There's nothing telling me it's going to move. So the question is, where do we play it? I'm looking at playing the 20, 24, 28, which actually just brings us right here. This is pretty much at the money. So this is true sideways call. And our break evens are probably about just below 27 and just above 20, probably 21-ish. So as long as it stays in these areas relatively, probably looking at a decent trade. You don't need to go out all that long on this one. I think a week or even 2 weeks is about the right duration on this. In the energy sector, last week we had Phillips as a short with a targeted butterfly at 85. The stock fell down about 6%. It actually went a little bit past 85, but pretty much closed right on the dot of our butterfly at 83.76. So that was a nice targeted butterfly to the downside. This week, let's stick with that butterfly. So we've got a sideways stock again in this sector. We're taking a look at some key support and resistance areas. Ultimately, 16 to 18 looks like the area we're in. So we want to take a look at this area and say, how do we build a butterfly around these targets? And the quick answer is we look at the 16, 17, 18, or I'm looking at this being slightly more bullish. Again, you could choose anywhere you like on your butterflies. I'm going to target this one just a little bit bullish here. We got this nice candle here. We'll have to see what happens, but I see this thing being a little stronger than weaker. And I see the sector being a little stronger than weaker. So I always like to have my butterflies in harmony with my sector analysis and industry group analysis. So that's a sideways trade on Kinder Morgan KMI. If someone said, Rob, I want to do the 16, 17, 18, perfectly fine. One of us is going to be right, one of us is going to be wrong, and we'll find out in 2 weeks. That's all that we have for you for trades. If you want to see more trades as a Maverick trader, go into our members area, jump onto the forum. I'm going to be putting a list there of trader trades. Please jump on, share your trades with the rest of our community and the rest of our traders, and let's get some discussion going and help each other out make some money this week. In conclusion, look, we're firmly above the 50 SMA. This is our line in the sand. And this is a rule that has really helped me so much over the past 25 years. I didn't have this rule until about 4 or 5 years in. I just decided, look, dummy, always trade with the trend. If it's above a rising 50 MA, it's an uptrend. No matter what you think about it, don't short it. That was always my weakness. I love to be on the bearish side of the market. So these stocks that looked too strong, I would take shorts in them. They got away from me. And on the reverse side, anything that is below a falling 50 MA, I must be short. No matter what I feel about it, no matter how much I like the company, it doesn't matter. So because it's above that 50 SMA, I cannot be overly bearish. When I take a look at all the trades in my portfolio, I need to have a net bullish delta. With that being said, we're at resistance. We've got lots of overhead resistance. We just had a tough jobs report. Not tough, a great jobs report, which is going to put a little pressure on the market. We're going to take a look and see early next week, can the market hold these recent gains with this new information? Or are we going to start to see bond yields creep up and stocks suffer because of it? I think by really Tuesday, we will know the answer to that question. So I'm looking to put trades on Tuesday and also on Monday at the close. I can put some trade on. As always, proper position sizing. We are going to be meeting live on Wednesday as usual, but we're going to be sending out some videos this week, one on the Thinkorswim stock scanner, and Corey's going to do one on the Chaikin money flow. So if you're not interested, if you're not familiar with that, tune into that. It's going to be a great video. Thank you so much. Everyone have a great weekend, and goodbye, everybody.
Good trade, everyone.